Welcome back to Fundamentals of Accountancy, Business and Management 1. We are studying Basic Accounting 1, and for Lesson 3, we're going to discuss users of accounting information. So what do we expect for this lesson? Content standards. The learners demonstrate an understanding of the external and internal users of financial information. Performance standards. The learners shall be able to solve exercises and problems on the identification of users of information, types of decisions to be made, and types of information needed by the users. Learning competencies. The learners shall be able to define external users and give examples, define internal users and give examples, and identify the type of decision made by each group of users. And the lesson is to describe the type of information needed by each group of users. Now let's have a quick review of the definition of accounting. We've said that accounting is the process of identifying, recording, measuring, classifying, verifying, summarizing, interpreting, and communicating financial information. And in short, accounting is the systematic process of identifying, recording, and communicating economic events of an organization to interested users. When you say identifying, it includes selecting economic events that are relevant to a particular business transaction. And the economic events of a business is referred to as transactions. So, in a bakery business, transactions may include sales of bread and other bakery products, or purchase of flour that is used in making bread, or purchase of a truck that can be used to deliver those products. Now, recording involves keeping a chronological diary of economic events, and this diary is referred to as the journals and the ledgers, which we're going to study in the later lessons. One important thing to remember in recording is that what we record in here is measured in pesos. Now, communicating involves the preparation of financial statements and other accounting reports and distributing them to the users of information. Okay, we already know that accounting is the language of business. The affairs and the results of the business are communicated to the users through the accounting information. And this accounting information has to be systematically recorded and presented. Then the users will use this accounting information to make better financial decisions. Now, there are many businesses that you can put up. It could be buying or selling of cars, having a boutique, operating a printing shop, or it could also be a gasoline station of your own, or probably a private school. Now, if you are the owner, what do you want to know about the business? It could be, how much income have I earned for this month? Or how much collectibles do I have? How much do I owe my suppliers? And how much inventory do I still have? An owner will also need help in making decisions. What possible decisions can accounting support? Could be, will I be able to pay my liabilities if I earn this much? Or can I open more branches? Or can I buy a new equipment? Should I adjust my price? Or do I need to cut cost? Now, what if you were from an LGU? Do you think you will still be interested with accounting reports and records? These are just some of the questions that will be answered in this lecture, and the focus of our discussion are the users of accounting information and their information needs. Now, there are two broad categories of users of financial information. We have the internal users and the external users. Internal users of accounting information are those individuals inside a company who plan, organize, and run the business. These users are the management, the employees and the owners, and they are directly involved in managing and operating the business. They can also include the marketing managers, the production supervisors, or even the finance directors. For the management, the information that they need is the amount of the income or the earnings for the period. They want to know how much the sales is, or the available cash, or even the production cost. The decision supported by the accounting information would be to analyze the organization's performance and position and take appropriate measures to improve the company. The result would be probably they would know if there is sufficiency of cash to pay for the dividends to stockholders. They can also do pricing decisions based on the accounting information that they receive. For the employees, what do they need? They need to know the profit for the period. They need to know whether the company will be able to pay for their salaries. And why do they need this information? Because they also need to make decisions. The decisions supported by the accounting information for employees could be job security, or when they consider staying in the employment of the company, or whether they have to look for another company to work for. Now, for the owners, the accounting information that they need would be the profit or income for the period, and also the resources or assets of the business and the liabilities of the business. The decisions supported by these accounting information would be considerations regarding additional investment, or probably expanding the business, or borrowing funds to support any expansion plans. Accounting information is presented to internal users usually in the form of management accounts, budgets, forecasts, and financial statements. This information will support whatever decision internal users have. Now, for the external users, we have the potential investors, lenders, suppliers, customers, government and tax authorities, and also the public. External users are individuals and organizations outside a company who want financial information about the company. These users are not directly involved in the managing and operating of the business. And actually, two of the most common types of external users are the potential investors and the creditors. Let's look at the potential investors. They use accounting information to make decisions to buy shares of a company. Investors analyze the feasibility of investing in a company. Investors want to make sure that